Okay, dear students, Assalamu alaikum and good evening to everyone. Let's start our very first live revision lecture for December 2024 FR. And today we'll be discussing IAS 33. Earning per share, EPS. So let's try to recall all the concepts of EPS. Formula is EPS is equal to profit after tax minus preference dividend. If you are calculating EPS for the group, then we do deduct non-controlling interest as well. But let me repeat, NCI will only arise when we are calculating EPS for the group. Weighted average shares, obviously parent shares. Weighted average shares. And weighted average ordinary shares. Normally, actually, we need to calculate EPS for a single company. That is why you will not see NCI. But if you are required to calculate, let's say, EPS for the group, then there will be NCI. So earning per share is equal to profit after tax minus preference dividend divided by weighted average ordinary shares. Preference dividend. Obviously, preference dividend is given to the preference shareholders. There are two types of preference shares. Redeemable. A redeemable preference share is your loan. On loan, obviously, we pay interest, not the dividend. And interest is already deducted before reaching PAT. The second is irredeemable preference shares. Irredeemable preference shares. Irredeemable preference share is treated as an equity and dividend is paid to the equity holders. There are two types of irredeemable preference shares, cumulative and non-cumulative. Cumulative and non-cumulative. Simple concept. In case of irredeemable preference shares, cumulative one. So in case of cumulative irredeemable preference shares, either company has declared the dividend or not. Irrespective of that fact, you have to calculate dividend, and while calculating EPS, you have to deduct the preference dividend. So repeat, in case of cumulative irredeemable preference shares, irrespective company has declared the dividend or not, we have to calculate preference dividend. How do we calculate preference dividend? Simply preference share capital multiply by percentage of the preference shares, which will be given to you. So simply preference share capital multiplied by the percentage will give you the dividend amount. So repeat, in case of cumulative irredeemable preference shares, either dividend is declared or not, you have to simply calculate the dividend and deduct it. But in case of non-cumulative, dividend will only be considered. Dividend will only be deducted while calculating EPS when company has declared the dividend. So in case of cumulative, either it is declared or not, you have to calculate the dividend and deduct it. Another thing, in the exam, if examiner has just given you the preference shares and nothing is mentioned, then we always assume given preference shares are irredeemable cumulative preference shares. Let me repeat, in exam, if nothing is mentioned, then given preference shares, we always assume they are irredeemable and cumulative. Now, when it comes to weighted average ordinary shares. So basically, calculation of weighted average ordinary share is extremely important. And especially when we are calculating weighted average ordinary shares, and let's say company has issued bonus shares, let's say company has issued right shares, then obviously weighted average ordinary shares calculation becomes more important. For example, let's say we have issued shares 100,000 on 1/1/2024. Issued shares 2,50,000 in March. Nothing is mentioned, it is always end of the month. Repeat, nothing is mentioned, it is assume always end of the month. When we say in March, it is end of March. Let's say issued 1,50,000 shares in June. Let's say issued 300,000 shares in December. Profit after tax, let's say it is 7,50,000. Requirement, we need to calculate basic EPS. Year end is December 24. So simply first we have to calculate weighted average ordinary shares, and once you have calculated weighted average ordinary shares, then obviously you can easily calculate basic EPS. Let's try. How do we calculate weighted average ordinary shares? Let's see. Even though we know that IAS 33 will not be tested in section C, but obviously IAS 33 is examinable in section A as well as in section B. So obviously you have to know each and everything about IAS 33. How do we calculate weighted average ordinary shares? Just make few columns. That is more easier approach. Date, shares, time factor, adjustment factor issue only arises when there is bonus issue or right issue, or let's say both. Adjustment factor, we'll see that also in the next question. Date, shares, time factor, adjustment factor, and let's say the last column is the weighted average. Date, shares, time factor, adjustment factor, and weighted average. Issued shares 1/1/2024 is 100,000. After January, company has issued 2,50,000 shares in March. Nothing is mentioned, it is always end of the month. 31st March 24. Issued shares 2,00,000 50,000. It means we can say that in March, total number of shares, they will become 3,50,000. Because before March, company has already issued 100,000 shares. In March, company has issued 2,50,000. So it means on 31st March 24, company will have total 3,50,000 shares. Okay. Now, what about the time factor? From 1st January till 31st March, the time period is 3 months out of 12. 12 is your accounting period. Obviously, the accounting period is of 12 months. So from 1st January till 31st March, first 3 months, actually, company is having only 100,000 shares. That is why the time factor is 3/12. Now, after March, what happened? In June, company has issued 1,50,000 shares. 30th June 24, issued shares 1,50,000. So we can say that obviously before 150 already company has issued total 3,50,000 shares. So in June, the total number of shares will be 500,000. In June, total number of shares will be 500,000. So 30th June 24. Now from 31st March till 30th June, the time factor is 3 months. Okay. In December, 300,000 shares issued. In December means end of the December. December 24. Issued shares. We have 300,000. Before 300,000, the total shares are 5 lakh. It means total shares on December 24 is 800,000. But very important point, from 30th June till December, the time period is 6 months. From 30th June till 31st December, the time period is 6 months. Now, if you just count the months, 3 out of 12, 3 out of 12, it means 6, then again 6. So already 12 months calculation, we have done it. If you just total the numerator, 3 plus 3 plus 6. So the total of numerator and denominator is now equal. Basically here, we cannot time apportion 800,000. Why? Because the year end is December 24 and we are reached on December 24. Still you want to do something, it will be 0.12. Because now we do not have any time to time apportion 800,000. So the concept, the logic is, if it comes in a multiple choice question, especially in theory, if examiner says, does shares issued at the end of the year will affect weighted average ordinary shares of that year? The answer is no. If you are issuing shares at the end of the year, if you are issuing shares at the end of the year, then it will have actually no impact on your weighted average ordinary shares. But obviously, those shares will be number one recorded. Number two, those shares will be included in SOFP. Obviously, when company will be preparing statement of financial position. So actually, you have issued ordinary shares. So whatever is the double entry of ordinary shares, let's say cash or bank is debit with the par value share capital credit over and above share premium credit. So shares you have issued, there is no doubt about it. In SOFP, we are going to take those shares as well. Number of shares will also increase. All things are correct. But the concept is logically, when you have issued shares at the end of the year, it has no impact on weighted average ordinary shares. It can be seen here. We are doing 0.12. So obviously it will be 0. So 100,000, 3 by 12, I strongly believe 25,000. So let's say 3,50,000 multiplied by 3 upon 12. I'm getting 87,500. 500,000 6 by 12 will get 2,50,000. Then obviously 0. So 2,50,000 plus 87,500. First is 25,000. 25,000 plus 87,500 plus 2,50,000. Students, I'm getting 3,62,500. I'm getting weighted average ordinary shares 3,62,500. Now, let's try to include bonus. Bonus issue. Obviously, bonus is free of cost. Given to the existing shareholders. Given to the bonus issue, free of cost, given to the existing shareholders. Now listen carefully. If you get a multiple choice question, let's say an examiner says by issuing bonus shares, let's say examiner says company can raise the finance. Company can raise the finance. So obviously this statement is false. Because bonus issue is free of cost, you're not getting any fund from your shareholders. So if examiner says, is this statement true or false? So obviously that is a false statement. By issuing bonus shares, you cannot raise any finance because bonus are given to the existing shareholder as free of cost. Okay. In case of bonus issue, you should be able to calculate bonus adjustment factor. Now, what is that bonus factor? Simply, shares after bonus divided by shares before bonus. And mathematically, the answer must be greater than 1. Obviously, shares after bonus will be more than shares before bonus. So that's very pretty straightforward and logical. We know that shares after bonus, they will be more than shares before bonus. So when you are going to divide shares after bonus by shares before bonus, obviously your answer will be greater than 1. So bonus factor, how do we calculate? Shares after bonus divided by shares before bonus. For example, let's say your examiner says there's a bonus issue of 1:2. This 1 is bonus, 2 is existing shares. Let's say examiner is actually giving you the information and examiner says that company is issuing 1 bonus against existing 2 shares. If company issues 1 bonus against existing 2 shares, It means that after bonus, 2 shares will become 3. After bonus, every 2 shares, they will become 3. So your bonus factor, or you can say adjustment factor, is going to be shares after bonus, they will be 3, and shares before bonus, it is 2. So that is 1.5. And the first one is bonus, and the second one is representing the existing shares. So your bonus factor is 3/2. You can see that mathematically it results in 1.2, means more than 1. Okay. Another possibility. For example, if examiner says there's a bonus issue of 2:7, it's okay. Logically, 2 is bonus issue. 7 existing shares of the company. So 2:7 means company is going to issue 2 shares as bonus against 7 shares. It means that bonus fraction will be, can I say 9/7? Because if there's a bonus of 2 shares against 7, if there's a bonus of 2 shares against 7, so obviously after the bonus 7 shares, they will become 9. So 9 divided by 7, I'm getting 1.2857. So you can take it 1.286. There's no harm at all. And please, little bit rounding off is acceptable. There's no issue at all. So the bonus fraction or adjustment factor, instead of fraction, take it bonus factor is the same thing. So your bonus factor is actually 1.286. Now the question is, what are we going to do this with bonus factor, adjustment factor? Basically, this bonus factor is applicable on all those shares. They exist before bonus issue. Repeat. Bonus factor is applicable on all those shares. They exist before the bonus issue. For example, let's try one question. And before that, there's another possibility. If examiner gives you the bonus, let's say examiner says bonus issue is 40%. Instead of ratio, what if examiner gives you a percentage? If examiner has given you the bonus is 40%, then bonus factor will be 1.4. If examiner has given you the bonus issue 20%, then bonus fraction will be 1.2. So either you will be, examiner is going to give you a ratio or a percentage. Obviously, it is up to the examiner, but you should know that when ratio is given, what to do, when percentage is given, what to do. Now, what are we going to do with this bonus factor, with this adjustment factor? Actually, this adjustment factor is applicable on all those shares which are before bonus. So bonus factor, adjustment factor is applicable on all those shares they are before bonus. For example, issued shares 200,000, 1/124, issued shares 300,000, 30th April 24, bonus issue. Bonus issue is 1:5 in June 4th. Issued shares in September. Again, nothing is mentioned. So in September means end of September. Profit after tax, 400,000. Year end is, let's say, December 24. Required, calculate EPS. So we just simply need to calculate basic EPS of 24. Okay. Let us first calculate weighted average shares. Obviously, without calculating weighted average shares, we cannot deal with IAS 33. Let's try to calculate weighted average first. Date, simply take shares. Time factor. Now we do have adjustment factor. Weighted average. 1124, we have bonus issues 200,000. Shares issued. 1124, shares issued is 200,000. Okay. One 24 shares issued 1124 shares issued 2 lakh. Then on 30th April, 3 lakh shares they have issued more. It means we can say that on 30th April, 24 total shares are 5 lakh. From 1st January till 30th April. From 1st January till 30th April, how many months are there? 4. So time factor is 4 upon 12. From 1st January till 30th April, time factor is 4 months. Okay. After 30th April, what is happening? Nothing is mentioned. It is end of the month. In June, there's a bonus issue. So adjustment factor of bonus issue will be 1:5 means 1 bonus against 5 shares. 1:5 means 1 bonus against 5 shares. If there is 1 bonus against 5 shares, so after bonus, total number of shares will be 6 and before bonus they are 5. 1:5 means company is issuing 1 bonus against 5 shares. So obviously after bonus 5 shares, they will become 6. Before bonus, they are 5. Obviously 6 upon 5 is your adjustment factor and mathematically it results in more than 1. You can work by using 6 by 5. Now, 6 by 5, this adjustment factor is applicable only on those shares. They are there in the question before the bonus. Repeat. Adjustment factor of bonus is applicable on all those shares. They are there in the company before the bonus. So it means bonus issue is happening on 30th June 24. Factor we have calculated, adjustment factor, that is 6 upon 5. And this is applicable only on shares which are before bonus. Now listen. 200,000, this is obviously before bonus. And factor is 6 by 12 or 6 upon 5. Okay. Obviously, these 500,000 shares, they are also before bonus. From 30th April till 30th June, there's a time period of 2 months. So time factor is 2. And 500,000 shares, they are before bonus. So adjustment factor. Now listen. Before bonus, total number of shares, we have 500,000. Before bonus, total number of shares, we have 500,000 and company is actually issuing 1 bonus against 5 shares. 1 bonus against 5 shares. 1 upon 5 will give me the bonus shares. That is 1 lakh. If you look at this, before bonus, we are having 5 lakh shares. Bonus issue is 1 lakh. So after bonus, total shares will be 600,000. After bonus, total number of shares will be 600,000. Now 6 upon 5 adjustment factor cannot be applied on 600,000 because 600,000 is after bonus. And adjustment factor is only applicable on those shares they are there before the bonus. We cannot apply 6 upon 5 with 600,000 shares because 600,000 shares they are after bonus, they already have the impact of bonus. Repeat, adjustment factor is only applicable on those shares they are there before the bonus. Now, after 30th June, the next transaction happened in September. Issued shares, let me write. Let's say issued shares take 1 lakh. Issued shares in September is 1 lakh. Okay. Nothing is mentioned. We know that it is end of the month. Issued shares in September, we have taken 1 lakh. So before September, total shares, there was 6 lakh. Now they will become 700,000. So 30th June 24. From 30th June till 30th September, the time period is of 3 months. From 30th June till 30th September, the time period is 3 months. Okay. Now on 30th September 24, the total shares are 7 lakh. And after September, company has issued no more shares. It means from September till December 24, company is having 7 lakh shares. From 30th September till 31st December, company is having 700,000 shares. So the time factor from 30th September till December is 3 by 12. Again, you can see that 4 months, then 2, 6, 3, and 3. So basically the total of numerator is going to be either exactly 12 or less than 12. Less than 12 numerator total is possible. I'll tell you when it is possible. But it is very much possible because there is a possibility that it is the first year of the company and company has just incorporated in 2024. And another possibility is, let's say on a very first day, company did not issue the shares. Let's say company has issued the shares after 2 months or 3 months. So you have just incorporated the company and let's say you have not issued the shares on day 1. You have issued shares, but after 2 months or maybe after 3 months. In this case, when it is the first year of the company and company was incorporated and shares were not issued in day 1, shares were issued after 1 month or 2 months. In that case, logically numerator total will be less than denominator total. Denominator you will have 12. But right now, take a very simple approach. Keep that simple approach, that is numerator and denominator total will be same. Denominator, we know that it is 12. It will remain 12. But look at the numerator. 4 plus 2, 6 plus 3 and plus 3, 12. So let's use the calculator. 200,000. 4 upon 12. You have to multiply all of them, all 3 of them. So 200,000 multiplied by 4 upon 12. Students, I'm getting 80,000. Please recheck. Yes or no? Okay, now 500,000 2 upon 12, 6 by 5. 1 lakh. 600,000. 150. 700,000. 1,75,000. Let's calculate the total weighted average. 80,000 plus 1 lakh plus 1,50,000 plus 1,75,000. I'm getting 5,05,000. So very simple calculation of a basic EPS. Profit after tax, they have given us 4 lakh. Divided by weighted average shares. 4 lakh divided by 5 lakh 400,000 divided by 5 lakh 5,000. I'm getting 0.792. So your basic EPS is 0.792. Now, student, listen very carefully. Since it is just the first class of December 2024 session, so I deliberately don't want this first live revision class to be very long. What are we going to discuss? Remaining areas in IS 33, how to deal with the right issue, concept of, we'll be discussing restated EPS. How do we restate the basic EPS? We will be studying diluted EPS. And how do we restate the diluted EPS? Restated, diluted EPS. Restated, diluted EPS. So these are the concepts which we have to discuss in the coming class. How to deal with the right issue, restated EPS, diluted EPS, and very important concept is restated diluted EPS. How do we restate the diluted EPS? To me, it is very important. Okay, students. Next class, I want to keep on Saturday. In this Saturday, coming Saturday. Basically, the objective is at least you should be getting 2 live revision classes per week, at least. When I'm saying at least, it means there's a possibility of rise in the frequency, but chances are obviously less. 2 live revision classes per week, they are more than enough. What are we going to, what are the 2 objectives of the live revision classes? Let me repeat. One, to give you the quick summary of important ISS and IFRSs. That's number 1 objective. And second objective is to discuss the recent past papers with you in the live revision classes. Yes, live revision classes will be uploaded on the portal as well. If you miss, in case if anyone, like I would say a really big majority of the people, they are absent today. I don't know why they did not come to attend the live class. So live classes, obviously live revision classes, they will be uploaded, but it is highly recommendable. Try to take the live revision classes. So thank you very much. It's just the first live revision class. That is why I want this to be I want to keep it short. So students, simply thank you very much. Hope to see more students in the next class, inshallah.